1%. Vamos a seguir analizando lo que pasa en el sector financiero. Hoy lo ha comentado, por ejemplo, el Fondo Monetario Internacional, que si hubiera crisis financiera finalmente tendrían que frenar los bancos centrales en ese ímpetu por, bueno, pues también parar la inflación con las subidas de tipos. Pero vamos también a ver qué pasa con ese sector comercial del real estate, es decir, las oficinas. Hay muchos que están diciendo que es un peligro lo que está pasando ahora mismo, esa caída tan elevada que estamos viendo en las valoraciones de las oficinas, que se está trasladando también a los préstamos con colateral de estas oficinas, de este real estate comercial, y que ya dicen muchos que, bueno, pues es el siguiente peligro en el sistema financiero, teniendo en cuenta que muchos de los bancos que prestaron este dinero para estas oficinas, pues son bancos regionales, que son los que han tenido problemas ahora. Bueno, vamos a hacer un poco un análisis más internacional de lo que está pasando en mercados y de cómo poder invertir nuestro dinero en una situación como la actual con Michael Keough, que es gestor de carteras en Janus Henderson. Michael, thank you so much for being here. Good afternoon.
Hey, good afternoon. Thank you.
Michael, which are the current risks on the financial sector? Do you think that commercial real estate loans are dangerous right now?
You know, I think one thing that we've seen, especially with the banking issues that we've had, is people focused on interest rate risk. And obviously that played through the banking sector in some instances, and people are looking to say, what other sectors or investments are exposed to higher interest rates? And I think with commercial real estate, it flows through in two areas. Those higher interest rates and higher borrowing costs make it more expensive for them to borrow and refinance their loans. Higher interest rates can also cause the property values to decline. And then I think those two things together have started to be two risks that are very, very present. And then another fundamental risk, especially when you look at office commercial real estate in large cities, you've seen as a result of the pandemic, occupancy drop fairly significantly. And that's something we expect to persist. So yes, as a result of what we've seen through the financial sector and the banking sector, people are looking at what's next. And commercial real estate loans are an area that have some of those same risks and require investors to do a lot of work and research to make sure they're not exposed to some of the most concerning risks in that space right now.
The IMF just said, Michael, that the panic on the financial sector, on the banking sector, is contained. Do you believe that the panic over what happened, for example, to Credit Suisse or to Silicon Valley Bank is already over?
We do think that the risk escalated quite significantly back at the beginning of March. If you would have come to investors and said, "Hey, what are the top risks in the markets coming into 2023?" You would have not put banking system stability at the top of that risk. Yet they played out. I think one of the things that was very concerning was the speed of which that started to play out through the markets. Within a period of 11 days, you had 4 banks fail. And so most investors and also consumers that had deposits at the bank were very focused on what's next, what other institution may be weak. And so that was primarily what people were focused on, to try and figure out, all right, what is the next shoe to drop? What's the next company that may, or institution that may be exposed? I think what has transpired after March 17th or March 19th, when Credit Suisse was forced to be taken over by the Swiss government, or facilitated it through acquisition by UBS. What we did see to calm some of these fears and prevent it from contagion and spreading to other parts within the sector was aggressive government intervention. Within the US, they stepped in quickly. They made sure the depositors used a systemic risk exemption to make sure that they would have access to their money. They also increased lending facilities to banks in the United States to allow them to meet any deposits. And then regulators in Switzerland came in and stepped in and helped facilitate a transaction quickly. So I believe the swift actions that the government taken helped provide some stability, helped give consumers and corporations confidence to keep their money invested in banks. And I think those were 2 very important actions. And then over the last 2 weeks, we monitor weekly data coming out from the banks on the pace of deposit outflows. And so we've seen that decrease as well. So that primary concern around contagion risks and it spreading within the banking sector seems to be behind us at this point.
Michael, how should our portfolios reflect the current situation in the market right now?
Look, I think more so than any other time in my career, there's a very wide range of economic outcomes ahead of us. And I think it's very hard to say with conviction which one you think will play out. But I think one thing that is evident is the economy and markets are facing a multitude of risks, one being aggressive central bank tightening, not only US, but globally, European central banks, Bank of England, and across the globe. We're trying to increase interest rates to slow down the economy. We already had some things we had to deal with, slowing growth and the implications of that. And then on top of that, we're going to deal with the continued implications of the banking crisis. And what I mean by that is, as banks become more conservative and want to make sure they have enough liquidity to meet any deposit withdrawals, they're going to reduce the amount of loans that they make to customers. That'll have an incremental drag on the economy as well. And so when you are constructing a portfolio, we think it's very important to take into account those risks. In 2022, it was mostly focused on inflation. You had to make sure you navigated being exposed to inflation, and fixed income had a difficult time in that period. In 2023, it's more about the impact of fighting inflation on growth. So make sure you're having companies that can navigate a lower growth environment. And so on the equity side, we think that means finding companies with secular growth that can navigate a slowing economic environment. On the fixed income side, we think that means having more exposure to fixed income and the interest rate or duration risk. When you get to the end of a Federal Reserve or central bank tightening cycle, interest rates often can decline. That can result in price increases for fixed income and generate strong returns.
Right now is the time to invest in fixed income, for example?
You know, I've been in this industry for 17 years now, and I say one thing: we've been out speaking to clients more so than we have in a number of years, even over a decade. Is now that we've been saying bonds are back, and what do we mean by that? When investors really look towards fixed income for two main things, they look for it to provide income. After all, it's called fixed income. And now, when you look across U.S. high-quality investment grade fixed income markets, you can get 5% yields. That's higher, almost as high, over 95% of the time over the last 15 years. So yes, you're getting that income back. That's really important for investors. You have an option to get yields without taking a lot of risk. And then the second aspect of it that makes us positive on fixed income is its diversification properties. When you have a well-diversified portfolio, you may have equity alongside fixed income. And you do that because sometimes they can offset one another. When equities are down, historically over most periods, you have fixed income that can generate positive returns. And so with the uncertain economic environment that we face and the wide range of outcomes, we think fixed income is a very important portfolio construction tool, and investors would be well served to have an allocation to high quality fixed income today.
Michael Keough, gestor de carteras en Janus Henderson. Michael, thank you so much for being in Negocios Televisión. It's been a pleasure to speak to you.
Hey, thanks for having me.
Bueno, y mientras tanto nosotros miramos a los mercados financieros, unos mercados